Welcome back to Upside Down Data. Let's talk about how to maximize profits in an altcoin bull market. So by altcoin, I mean any crypto asset that is not Bitcoin. And to profit from altcoins, you need to understand the dynamics of how they behave, especially relative to Bitcoin. So I want to start there. So this is the Bitcoin chart. It is now trading at all-time highs. It actually tagged 80K today, and it just seems to be on a continuing moon mission. I think we probably go higher from here in the not too distant future. Now, the reason that we care about Bitcoin as it relates to altcoins is that Bitcoin tends to lead the crypto market. So let's actually look at this directly. The blue line here is Bitcoin's total market cap. And this pink line here is the market cap of all crypto assets other than Bitcoin. What you can see, for example, last cycle is that Bitcoin ran early. It really pumped first, then you had altcoins playing catch up afterwards. And that just tends to be the way that these things go. Bitcoin will move first, and then altcoins will move second. So that's why this is actually a very bullish sign for altcoins. The fact that Bitcoin is breaking out to new all-time highs, this is what has always happened in cycles first before you get that big altcoin move. So that's why this is a really important moment that we're in right now, that Bitcoin is going to rally. It could continue rallying further, but then there's a short window in which rotating into altcoins can actually help you maximize your profits. Basically, if you just sit in Bitcoin, you'll still make profits, especially if it goes up, breaks above 100K even further. But the question is that move going to be larger in magnitude than what you would have gotten if you would have sit in another asset like Ethereum, for example? So I want to talk about now is where do we stand in this current moment in terms of risk? And then how can we use that information to decide where should we maybe be allocating our funds? So I'll say off the bat, none of this is financial advice. These are just things that I think are worth thinking about as we move into this potential next leg of the bull market, with the election acting as this catalyst that might really turbocharge a next altcoin run. So what I want to do is talk about our short-term risk model that we have here at the channel across a bunch of different assets, Bitcoin and a bunch of different altcoins, to see where we stand currently and what that tells us about that asset allocation, that where should we be putting our funds kind of question. So this is the Bitcoin short-term UDPI. This is the risk model. It cares about moves that play out over days to weeks, so shorter in its time horizon. Higher values mean higher risk, meaning that you're likely at some short-term top or even cycle top. And then low values mean low risk, that you're likely in a good acquisition period. Now, the good news for Bitcoin right now is that though it's at all-time highs, its short-term risk is actually still below neutral. So way lower than the last time we went to new all-time highs back here at around 73, 74K. We're still way lower than that where we topped out, and certainly way lower than these prior massive moves where we'd be getting all the way up to the top or near the top of the scale. So if this is a full-on bull market, we are now entering in the kind of the end game where we're really going to see some explosive moves. I think the entirety of this risk range is in play for Bitcoin, and therefore we're only at the halfway point. And we could see much more movement before we might expect some notable top, before some kind of a drawback to happen or drawdown to happen. So that's Bitcoin. But then again, let's talk about altcoins. Where do they stand? So let's talk about Ethereum next. It is the next largest crypto asset. If you're not familiar with Ethereum, it is a layer 1 blockchain. It's basically a place where people can build decentralized applications like decentralized finance. Think of decentralized exchanges like Uniswap, or lending and borrowing applications like AVAX. And it's also a place where people can just build their own new tokens and have them live on Ethereum. So this is the short-term UDPI for ETH. And again, similar story to what we were seeing with Bitcoin, just slightly above neutral. But again, we'd expect this entirety of this upside here, the entirety of the top end of the risk scale to be in play, plenty of room to work with. And what you might expect is that if this cycle would be like previous cycles, maybe Bitcoin is going to take over the reins again at some point and run a bit harder, really kind of move up quicker. And maybe these lag behind a bit, but then they'll move up afterwards. And so that's what I'm going to be watching, that if we see that happen, what that would suggest is that once Bitcoin gets to these really high risk levels, if Ethereum is lagging behind and is still quite a bit lower, maybe rotating out of Bitcoin into Ethereum would actually be a good trade. You've captured a lot of profit on Bitcoin, now go into Ethereum to capture the rest of that profit as it happens. This is an idea of rotation. We've talked about this a lot on this channel before. I'll leave a link in the description to a video that goes into this in more depth and actually backtests this idea using the DPI. This idea of taking money out of higher risk assets and moving it into lower risk assets can actually help you compound profits and make much more profit than if you just sat in one asset. If you just sit in Bitcoin the whole time, you're probably not going to make as much money as if you rotated into something lower risk and rode that up. So the idea of maybe you'd capture an extra 20% in Bitcoin, but then miss out on a 3x or a 5x on some other asset. It's not worth hanging around for that 20% if you're missing out on a 5x. That's the idea. So that's Ethereum. I want to just kind of go down the line here of other large cap altcoins and talk about where they are. That's really what I want to talk about here. So the next one I want to talk about is Solana. So Solana is slightly above neutral here at about 1, with 5 being the maximum. So a similar kind of thing. It's got more room to work with. And you might expect that if Bitcoin really takes over the show, it will lag behind. There might be those opportunities that I was just talking about with Ethereum, maybe going into Solana. So Solana, if you're not familiar, is another layer 1 blockchain. It is much faster and cheaper to use than Ethereum. That's one of the main differentiators. And it's the main place now where meme coin trading has taken hold. So another one we can talk about is ADA, Cardano. So Cardano is an asset that was really big last cycle. It was one of the darlings last cycle, did very, very well, made a lot of people a lot of money. But then it got really hammered in this bear market and it has been somewhat lagging behind. Whereas Solana is about to break all-time highs pretty much as I record this, or very close to it. ADA is still lagging behind, but it has played quite a bit of catch up ever since the election. It has moved very explosively, and it is now at a similar point around neutral risk right now to what the other assets we were talking about. And Cardano is another layer 1 blockchain, by the way. So now let's talk about Avalanche, AVAX, yet another layer 1 blockchain. You'll see a thread here, a theme where a lot of the bigger cap assets in the crypto space are layer 1 blockchains, just the way that it's tended to be. Won't necessarily always be the case, but that's the way it's been so far. So with Avalanche, we're actually sitting at a much nicer position than a lot of other assets we've been talking about. We're actually all the way down at negative 2.13. So actually quite a bit below neutral. And this is, I think, a pretty good value zone potentially for AVAX. The thing to know about AVAX is that it tends to actually be quite correlated with how Solana is doing. When we see Solana really pump here into new all-time highs, then you might actually expect that once Solana is slowing down, needs to catch its breath, then AVAX might actually be the one that really starts to take off after that. That's the way that's tended to happen both last cycle and even beginning of this cycle. It kind of follows whatever Solana has been doing. So who knows if that'll continue, but that's just one thing to note, and it is lower risk right now. So there might be a play there where Solana goes crazy, taking profits off Solana, moving into AVAX maybe could actually be a reasonable play. Okay, so the next one here, now we're finally getting to one that's not a layer 1 protocol. This is Chainlink. This is an Oracle protocol. So basically it is taking data that are outside of blockchains and then making it available to different blockchains. So if you have a decentralized application, like for example, an exchange or lending and borrowing protocol, you need to know what the prices are of different assets beyond just your chain. Let's say you have one of those protocols on Ethereum. You also need to know what the prices are on Solana. You need to know what they are on centralized exchanges like Coinbase, like Binance. That is what Chainlink does, is it basically brings in data from the outside of the blockchain to those protocols so they know what's going on in the outside world. It also, more recently, Chainlink launched a protocol to let different blockchains communicate with each other seamlessly and scalably. That's another use case for it, amongst a few others. So Link is also sitting a little bit lower than some of the others. It's around neutral, but a little bit below. And so I think it also has quite a bit of room to move. And the nice thing about Chainlink is that it might be more likely to move at a different time than some of these other ones. Layer 1 blockchains oftentimes are correlated of when they explode. You might expect something like Chainlink, which is more related to DeFi, to actually be more correlated with what happens there. That if the DeFi narrative really picks up and goes crazy, especially with the potential of much looser regulation in the United States, maybe Chainlink actually runs with those. And that can be another way that you think of this, is that there's tends to be narratives that happen at more of a category level, where maybe it's Ethereum running, then maybe it's layer 1 blockchains that aren't Ethereum, the faster ones, the more scalable ones that run. Then maybe DeFi runs, then maybe Web3 gaming, blockchain gaming runs. Different categories will run at different times. So you can look at an asset level of risk, but you can also look at that category level. Have layer 1s really started to get high risk? Maybe then it's like a good idea to move off of layer ones and into some of those other spaces. If DeFi's really run, then maybe move off of that and move to another space that hasn't run so much, so on and so forth. That's kind of the idea. And finally, I want to talk about SUI. So SUI is another layer one blockchain. Again, that's the theme of these larger cap assets, but it's one that's new. It was not around last cycle. And one of the benefits of that is it means that SUI doesn't have a bunch of people who are holding it from all the way back from the top of last cycle, who are just looking to maybe get out at break even, just get out at some reasonable point, not willing to hold it particularly far. There's basically less supply that's likely to immediately hit the market as you move up. You're not having that resistance that's baked in from prior history. And so that means that when it breaks out, like it has to new all-time highs, it can get really explosive. I mean, just go back and look at Solana. Solana went absolutely crazy last cycle. It was brand new to that cycle, had an incredible performance. Something like SUI could also do something quite nice. Maybe not quite as much. It's important to note that SUI is already a reasonable sized asset in terms of its market cap. But if this is a full-on altcoin market, things can get way stretched beyond what is at all reasonable. So I think SUI is one that's certainly important to watch. It's one that the market's kind of picked out as maybe being a next winner of this cycle in the layer one space beyond some of the other brand new ones that exist. And so really what I'm going to be watching across all of these is how are their risk levels playing out. First off, which one runs first? Is Bitcoin going to do what it's done in prior cycles and really lead the way and then altcoins follow? If so, then I'd be watching how its short-term risk is moving when that happens and if the altcoins are lagging behind. If altcoins are lagging behind, then what I would be thinking about personally, again, not financial advice, you do whatever you think is best, would be start to take profits off of Bitcoin as it moves up and is probably nearing its end or at least a local top, or at the very least the main meat of the move that it's going to have is over, and then start thinking about what are the ones that haven't moved so much, get my money into those to ride those up, those larger multiples. Because there's different ways you can make money in crypto. One of the ways is just to buy an asset and hope it goes 100x, 1000x, and then sell it, and then you make a lot of money. That's great, but it's really hard to do that. It's hard to pick that one asset that's going to do that just from the very beginning. What I think is probably more easy to do to maximize profit is instead of worrying about catching that one gem, instead you kind of spread your money across based on risk. You're concentrated in maybe at the beginning, you bought a lot of Bitcoin down through the bear market. You then wait until it's going up, and then you get to a point where it might continue going higher, but the remaining upside is probably limited. You know, maybe you're talking about 30% upside, 20% upside, maybe even 50. But that pales in comparison to what you might get in a different altcoin that hasn't run so much that could potentially give you 5x, potentially give you 10x. Would you rather hang around in Bitcoin for 50% more? Or would you rather get into that altcoin that's going to give you 10x more? And that's the important thing here. When things get really high risk, it doesn't mean they can't continue to run, but it just means that they're probably near the end, or whatever's left is going to pale in comparison to where you could get elsewhere. And so that's where, and I'm going to link to this in a video, when you do back testing, you actually find you will make more money by dynamically moving out of high risk assets into low risk assets rather than just holding throughout the whole bull market. So time will tell if this cycle is going to play out the same as last time. And of course, all this assumes that we avoid some cataclysm like a recession or something like that could derail all of this. But if we are going into a full-on bull market, I think rotation could be a way of maximizing profits. We talked about it before. We've had to wait a long time to get to a point where this might really come into play. But this could be, we might be at the beginning of stages of when that might play out. And that's the way that you can kind of turn a 5x move, compound that onto a 10x move, suddenly you have a 50x move. That's the kind of thing that we're talking about in this type of environment. So again, not financial advice, you should make your own opinions, but that's what I'm going to be looking very closely at as we enter this new hopeful leg of the market, final stages of the bull market, potentially the most explosive ones, and the ones where this kind of active rotation can be most beneficial. All right, like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates about models and more over there. And go to our website, polaritydigital.io, to see live data from our models like the UDPI and more.